Are you confused about the best way to finance your car? Don't fret, we've got your back. Welcome to our deep dive into the world of car financing. It's a topic that can seem daunting, but it's critical to understand if you want to make the most financially sound decisions when buying a car. There's a myriad of financing options available, each with its own set of pros and cons. Whether you're considering a hire purchase agreement, a personal contract purchase, or simply paying in cash, it's essential to understand how each option can affect the overall cost of your car. These financing methods can influence not only your monthly payments, but also the total amount you'll pay for the car over time. The right choice for you depends on your individual financial situation and your car ownership goals. By the end of this video, you'll have a better understanding of the different car financing options: HP, PCP, and cash. Let's start with hire purchase, commonly known as HP. This is a popular method of financing a car, and it's not hard to see why. It's simple, straightforward, and at the end of the day, you get to call the car your own. Here's how it works. You pay an initial deposit, which is usually around 10 to 20% of the car's total value. Now, the higher the deposit, the lower your monthly payments will be. That's because you're essentially dividing the remaining cost of the car over a set period, which can be anywhere from 1 to 5 years. So, let's say you're eyeing a car that's £20,000, and you decide to put down a deposit of £4,000. That leaves £16,000 to be divided over, let's say, 3 years. That's roughly £444 per month. Now, these monthly payments are fixed, which means they won't change over the term of the agreement. This makes budgeting a breeze because you know exactly what's going out of your account every month. But here's the kicker. Unlike other finance options, with hire purchase, you're actually paying off the car's value, not just its depreciation. That means that once you've made your final payment, the car is yours. No balloon payments, no mileage restrictions, no hassle. You own the car outright. That's the beauty of hire purchase. It's a no-nonsense, transparent way to finance a car. It may result in higher monthly payments compared to other options. But remember, you're investing in ownership, not just borrowing a car. So if you're someone who likes the idea of owning your car outright, and you don't mind the higher monthly payments, hire purchase could be the way to go. It's a straightforward, tried-and-true method of car financing that puts the power of ownership in your hands. HP is a good option if you want to own the car at the end of the agreement and don't mind higher monthly payments. Scene script. Next up, we have personal contract purchase, or PCP. Let's unravel this acronym together. Personal contract purchase, commonly known as PCP, has become an increasingly popular choice for car buyers. Its allure lies in the lower monthly payments and the flexibility it offers. In a PCP agreement, you're not actually buying the car outright. Instead, you're essentially leasing it over a set period of time, usually between 2 to 4 years. During this period, you pay monthly installments, which are calculated based on the predicted depreciation of the car, not its full value. This is why PCP payments tend to be lower than those of other financing options. At the end of the agreement, you'll face a choice. You can either return the car to the dealer without any further payments, or you can make the final balloon payment, often referred to as the guaranteed minimum future value, to buy the car outright. This final payment is determined at the start of the contract and is based on the expected value of the car at the end of the term. PCP can be a great option if you like to change cars every few years. With PCP, you can simply return the car at the end of the contract and start a new one with a different vehicle, keeping you at the cutting edge of automotive technology and style. However, it's important to bear in mind that there are mileage limits set in a PCP contract. If you exceed them, you'll be charged for every extra mile. Plus, the car must be returned in good condition, or you'll face additional charges. So, is PCP right for you? Well, if you want lower monthly payments, the flexibility to change cars regularly, and don't mind not owning the car outright, then PCP could be a perfect fit. PCP gives you flexibility, but remember, you won't own the car unless you make the final balloon payment. Finally, we've got the traditional method, cash purchase. So what exactly is a cash purchase? Well, it's pretty much what it sounds like. You walk into the dealership, choose your car, and pay the full amount up front. No loans, no interest rates, no monthly payments. You hand over the cash and the car is yours right there and then. This method of buying a car has its advantages. It's straightforward, for one. There's no paperwork to sign, no contracts to read, and no worrying about keeping up with monthly payments down the line. You also won't be paying any interest. When you finance a car, the total amount you end up paying is often more than the car's original price because of the interest added on top. With a cash purchase, you're paying exactly what the car is worth, not a penny more. Plus, there's the immediate gratification of becoming a car owner as soon as the transaction is completed. You're not just buying a car, you're buying the freedom to drive it wherever and whenever you want, without any restrictions or conditions. That's a big deal, especially for those who value their independence. However, this method is not for everyone. It requires a significant amount of money available at once. Not everyone has that kind of cash lying around, and even if they do, they might prefer to use it for other things. But if you can afford it, and you're sure that buying a car is the best use of your money, then a cash purchase could be a good option for you. There's something satisfying about owning a car outright, knowing that it's completely yours, paid for in full. It's a sense of accomplishment, a tangible proof of your hard work, and it gives you the freedom to sell the car whenever you want, without having to worry about settling any outstanding finance. But remember, while the idea of owning a car outright is appealing, it's essential to consider your financial situation carefully. Buying a car is a big decision, and it's one that should be made with careful consideration. Buying a car with cash means no monthly payments, but it's a hefty upfront cost. Now that we've covered all three options, let's compare them. Hire purchase, personal contract purchase, and cash purchase each have their unique advantages and distinctive drawbacks. It's like a three-course meal where every dish suits a different palate. Let's start with hire purchase. This option is like a hearty steak dinner. It's straightforward, satisfying, and at the end of the meal, the steak, or in this case, the car, is all yours. It's a great choice if you're someone who likes to own things outright. The downside? The monthly payments are typically higher than other financing options. It's a bit like paying more for a prime cut of steak. You get quality, but it comes with a higher price tag. Next up is personal contract purchase, or PCP. This is the tapas of car financing. It's flexible, it offers variety, and it allows you to switch things up at the end of your contract. You can choose to buy the car, return it, or trade it in for a new model. It's perfect for those who like to drive the latest models and don't mind not owning their car outright. But be mindful, like ordering too many small plates at a tapas bar, the costs can add up, and you may end up paying more in the long run. Finally, we have cash purchase. This is the home-cooked meal of the bunch. It's simple, uncomplicated, and once you've paid, there are no more costs involved. It's ideal for those who have the funds available and prefer to avoid finance agreements. However, like spending hours in the kitchen preparing a meal, it requires a substantial upfront investment. Now, how do you decide which option is best for you? It's all about understanding your financial situation and your car needs. If you're someone who values ownership and doesn't mind higher monthly payments, hire purchase could be your best bet. If you prefer lower monthly payments, flexibility, and driving the latest models, PCP might be your go-to. And if you have the funds available and prefer to avoid finance agreements, cash purchase could be your ideal choice. However, it's essential to remember that every financial decision should be made after careful consideration. It's like deciding on a meal. You wouldn't order a steak if you're a vegetarian, right? Similarly, you shouldn't choose a financing option that doesn't align with your financial situation and needs. Whether you fancy a hearty steak dinner, a variety of tapas, or a simple home-cooked meal, remember that your choice of car financing should suit your personal and financial tastes. Always consider your budget, your car preferences, and your future plans before making a decision. Remember, the best car financing option depends on your financial situation and needs. Take your time to consider each option and make an informed decision.